G'day everyone, welcome to this weekend update, and it's been a pause in the last week. Not a lot of action, particularly in the Australian market, but the opportunity that I've been talking about for several months now remains. Absolutely nothing has changed. We've just got a little bit of near-term nervousness in America thanks to the politicians, but that'll pass quickly enough, and all the circumstances around what I've been talking about for months, the great opportunity, one of the best you'll see probably in your lifetime, is about to unfold. It won't necessarily be the biggest gains in stock market indices that we'll ever see. There was dramatic gains coming out of the GFC in 2009. But what really appeals to me about this is that the circumstances are in place that the risk level about this happening is extremely low. So it's the reward for risk which is so appealing. I just don't think it gets a lot better than this. Anyway, let's move on and have a look at the action. Now, just a point I'll be updating, as I indicated that I would several months ago. On the first weekend of each month, I will be updating our progress results in our trading account, and so that'll be next week. So let's have a look at a summary of what happened on the week. After a couple of very good weeks to the upside, the S&P index lost 18 points on the week. There was a big breakout with the Fed decision not to suspend or not to taper back their bond buying program. But since then, there's been about 6 or 7 days just dribbling to the downside. So we've got a bit of a mild retracement on our hands. And really, it's just stemming from the wrangle in the American Parliament about the debt ceiling between the Republicans and the Democrats. If you remember the last time they did this back in 2011, it certainly did upset markets a fair bit. This time, the reaction I don't think is anywhere near the same. I think people expect that there'll be some grandstanding and then it'll just get back to normal. And markets will move on, the debt ceiling will be raised, and so this time there's not a real lot of concern about it. But we may see some near-term volatility, and frankly I hope we do, because unless we get a pullback in stocks, then we don't actually get good entry points. So I'm hoping that we do get a bit of near-term volatility. So let's have a look at that S&P chart. So you can see here that we'd formed a high at 1710. We pulled back from it. You can see the last couple of pullbacks, one in June and the recent one in August, didn't even make it back to the 150-day moving average. So that's a real sign of strength. And it then broke to the upside, as you can see. Formed a new high. That was the day the Fed made the decision not to wind back their bond buying program, and then since then there's just been a bit of a rethink about what's happened, and the index has come back a little bit. It was well overbought anyway, so this is healthy. You don't want markets just continuing to scream to the upside, because then you end up with some kind of real cataclysmic top, and then markets fall apart. So this is good. It's nice and controllable. And if we have a look at the Russell 2000 index, small caps, small to mid caps, you can also see that there's nothing overtly wrong with that index either. It's still showing a lot of strength. In fact, it's actually still at a new all-time high, so it's actually running stronger than the S&P index is. So all the signs out of the States are pretty good, but I would say that there are markets that are going to be doing better. Clearly, there are stock markets in Europe that are poised to break out. Greece, Ireland, Spain, Italy are all looking like they're going to break out into new bull markets. So there's actually a lot of positive signs around the place, and certainly our market is outperforming as well. The other thing that's important to look at too is this is the VIX index, which is an indication of how much fear and nervousness there is in the market, people buying options to protect themselves. And you can see We had these big spikes back here in 2011, and then we got some more spikes in 2012. We've had a couple of little ones since, but you can see it's still very close to its lows, down around 14. So there's no real nervousness in the market about this debt ceiling wrangle than there was in previous years. So that's a pretty good sign. Turning to the US dollar down a little bit overnight. It is heading back down again, probably heading back down to 79.80. So the decision by the Fed has put the US dollar back on track for lower levels. Now let's just have a look at the Australian index. As you know, I don't pay a lot of attention to this. It's really fairly meaningless for the stocks that I trade and invest in. And you can see it's gone to a new all-time high. We had a dip for a couple of days, and then it's been off again for the last few days. So pretty positive sentiment in Australia, and we're doing better than what the American index is. So we gained 35 points on the week. We're beyond the double top, but beyond that, what's really more important is looking at the actual sector indices. Now turning to metals, gold rose by $14 on the week. Copper was steady at $3.29. Oil slipped again a little bit back to 103 now that the situation in Syria is not as serious as it was or did look. There's the chart on copper. Now let's just go back and have a look at gold. So this is gold on a on a daily basis. We had a big jump when the Fed made their announcement, but since then gold has slipped back, and really the last 5 or 6 sessions has pretty much closed unchanged. It still looks very much to me like this is a base that's forming. We've formed higher highs and higher lows, so I think I'm pretty comfortable that we've seen the bottom. Could we get another little retest back down here sub 1300? Yes, we could. Still doesn't change the big picture scenario. And it's important to remember that the basing phase and the movement into a new bull market is not an event that happens suddenly. It's a process that unfolds over many months, sometimes 6 to 12 months. So don't be impatient with what's happening with precious metals. This is silver. The pattern looks very similar. It's a bit more definite. You've definitely got a new high. There was a big surge in silver. So looking pretty positive there as well. Let's just have a look at the GDX index. So this is the main stock index. So gold stocks still basing. Again, higher highs and higher lows, but they're taking their time to build up momentum, that's for sure. So just to finish off, just from an overall strategy point of view, as I said last week, it's pretty hard to see the significant September-October cyclical low that we often get. We're almost into October now, and there's been very, very little. So I think it's highly likely now we're not going to see that typical kind of sell-off we see in September. And we could see a bit of volatility, largely around what's happening with the US government, but it doesn't change anything. It's just a bit of short-term action that'll pass fairly quickly. So my absolute convictions is this is one of the best buying periods you're ever going to see, and we've got range trading opportunities, we've got new bull market opportunities, and it's a very, very exciting period in time. If anyone wants to contact me to talk about what we do and how we might be able to assist you, then there's my email. It's been very pleasing to have been getting lots of emails and a few phone calls from non-members. So I'm really happy to do that. So if anyone would like some more information, then please get in touch with me. Looking forward to next week. Cheers.